So good morning, everyone. We've completed a sound check there 5 minutes ago with a few people who logged in early. So let's get started. So we've had a great response to today's webinar with the maximum number of 1,000 accountants and payroll bureaus registered, which is fantastic. Today's webinar will give you 1.5 CPD hours. You're quite welcome to type in any questions that you have throughout the webinar. On the right-hand side where your control panel is, there's a little question tab there. So as you think of any questions, please type them in, and at the end of today's session, we'll have a Q&A session, and we'll try to get through as many questions as we can, but if we don't answer your question, we will get back to you. Today's session is being recorded, and we will automatically email you a copy of the recording so you can watch it at a later date. So we have designed today's webinar to help you get an understanding of how PAYE Modernisation will affect your payroll bureau and what impact it will have on your clients. PAYE Modernisation will involve the most significant reform of the PAYE system since the introduction in 1960. Employers will need to calculate and report their employees' pay and deductions as they are being paid. This will make it easier for revenue, employers and employees to ensure that the correct tax is being deducted and paid at the correct time. So we have 3 speakers presenting today. First up, we have our main speaker, Paul Byrne, who is the Managing Director at Thesaurus Software. After qualifying as a chartered accountant, Paul went on to set up and manage his own accounting practice. Paul co-founded Thesaurus Software in 1991 with the goal of providing payroll software to Irish businesses. Thesaurus Software now provides quality software products and excellent customer service to over 100,000 businesses across the UK and Ireland. So welcome, Paul. Next up, we have Sandra Clarke, who is a partner at BCC Accountants and a council member of the Irish Tax Institute. So welcome, Sandra. We also have Sinead Sweeney, who is the PAYE Modernisation Change Manager for the Revenue Commissioners. Sinead is very much on the front line when it comes to PAYE modernisation. So welcome, Sinead. For our panel discussion today, we will have Paul, Sandra, Sinead. We will also be joined by Audrey Mooney, who is the support manager at Thesaurus Software and holds qualifications in payroll management. So I'll now pass you over to Paul. That's a quick run through of our webinar agenda. So we've a lot to get through. And then Sinead will have her revenue presentation, and then we'll have our panel discussion, which will probably run into the Q&A as well. So take it away there, Paul. Thank you.
Okay, thank you very much for that, Karen. Okay, well, first of all, what is PAYE Modernisation? It's also called real-time reporting, and it's probably the biggest overhaul of the PAYE system since PAYE was introduced back in 1960, which happens to be the year before I was born. Currently, lots of employees are being given the wrong tax credits and cut-off points, and this is because revenue only gets payroll data once a year in the form of the P35. Receiving the data in real time will ensure that revenue can allocate the correct credits, thereby avoiding over and underpayments of tax. Revenue should know where the taxpayer is working and how much they are earning. Many employers are not operating PAYE correctly in that they don't register new employees or they use out-of-date tax credits. This is also being addressed by PAYE Modernisation. Essentially, a file much akin to a P35 will be submitted electronically to Revenue on or before or shortly after each pay run. In most cases, this means a file is submitted either weekly or monthly. Also, the retrieval of tax credits will be automated, which should ensure that the correct credits are being applied by employers. Employees will have their own online portal with Revenue through which they can tell Revenue about changes in their employment, for example, departures or commencements. And through this portal, they will also be able to allocate credits across multiple employments if they choose to do so. At any stage, employees through the revenue login can view what data their employers have submitted in respect to them. They won't quite see payslips, but will see a version of payslips, a statutory pay and deduction statement, so to speak. Revenue will not have sufficient information from the real-time feed to display a proper payslip. For example, they won't have any the non-statutory deductions such as union dues, staff loan repayments, or anything like that. At the end of a tax year, the individual taxpayer will be able to view and print their official certificate of earnings and deductions directly from their portal. This means that P60s should no longer be required. The files being submitted each pay run will have details of employees commencing and employees leaving. And this will mean that P45s and P46s are no longer required to be completed by the employer. As revenue will be receiving file submissions each pay period, the annual P35 will no longer be required. In addition, this periodic file will eliminate the need for P30s. Excuse me. Okay, let's get into a little bit of technical stuff. API stands for Application Programming Interface. An API enables different software applications to communicate with each other. In our case, it allows our payroll software to directly interact with revenue systems. And this all happens under the hood and usually results in a much better user experience. For example, look at how tax credits, or P2Cs, are retrieved at present. You log into your ROS account, you go to the Revenue Record tab, you then select P2C details, you then search for the relevant tax year, then you export, which involves choosing where to save to. Then in your payroll software, you go to the relevant P2C import screen or import section. You need to select the correct file from the correct location and then import. By my count, there are at least 9 steps involved in that process. With the API, it should be one click to achieve all of the above. Similarly, with the periodic payroll submission, which contains information similar to the annual P35, the actual transfer of this data to revenue will also be a one-click process. I should say also the click count may be somewhat higher, as in our software we probably need to include some "are you sure" dialogues just in case. Because of the APIs for P2C retrievals and file submissions, the actual work required each pay period should be less than at present. So let's look at a typical pay period and then the sequence of events. First of all, you'd be entering the details of new employees into the payroll. Nextly, you would retrieve the latest P2C information, and this should, as I said before, should be a one-click process. Next, you enter the pay hours and deductions for all the employees. Then you'd process and finalize the payroll. Nextly, you submit the file to revenue, and this again should be a one-click process. And finally, then you distribute the pay slips and pay the employees. One thing I should mention here is that we as software developers are pushing for a revenue system that will respond to all API calls in a matter of seconds. I know they are hoping for the same. Obviously, the response time for large submissions, say with 1,000 or more employees, may well take a minute or two. And it should also be noted that the one-click processes will use the employer's or agent's digital certificate, and this cert will need to have been installed on the computer. If the user can log into ROS on the computer, then it has the cert installed. For those computers without a digital certificate installed, Revenue may consider making use of a technology called OAuth. And OAuth is an interesting one. Say your client has their own digital certificate and they are not included within your own agent access. Using their digital certificate, they can request that you get a temporary access token, which you can then use to log in. That temporary access token may last for a year. To be more accurate, it is actually you who makes the request. The client then approves the request using their credentials, and then the OAuth service sends your payroll software a token granting access. Whether OAuth will be used or not is still to be decided, but it would possibly make things a bit simpler for bureaus. There are various other parts of the API process not covered in this webinar. For example, different ways of checking submissions already made, and these will be used by our software to present information back to you. Okay, let's have a look at the timetables for both software developers and revenue. Okay, at the very start of this, the last Minister for Finance, Michael Noonan, announced the launch of Revenue's public consultation process regarding the modernisation of PAYE system in his budget statement last October. Planning on this project by Revenue started last year, and they've already allocated substantial resources to it. In a nutshell, the plan was to have the file specifications agreed by June 2017. The file specifications for the P2C request, which is now called the RPN, which stands for Revenue Payroll Notification, and also the Payroll Submission request, which is the Periodic Data Submission, were both published on the 30th of June 2017. This was after a period of consultation with payroll software developers through its representative body, the PSDA, and other stakeholders, being the likes of the Chartered Accountants Ireland and the Irish Tax Institute and so on. As software developers, our main aim was to ensure that A, only items contained within payroll software were being looked for in the submissions. At some stages this was a bit of a battle. And B, that other structural issues such as identifying multiple employments with the same employer were workable. In fairness, I'd have to say the Revenue have listened and they've taken our suggestions on board, and the resulting file specifications are, in my opinion, reasonable and workable. The next Revenue deadline is for the provision of a test environment, which Revenue plan to have in place by the end of March 2018. This will allow software developers to test file submissions and responses in real time. It's also a good opportunity for Revenue to test their own systems. Hopefully this will provide plenty of time for testing and tweaking in the run-up to the go-live date of the 1st of January 2019. As developers, we have to ensure that the APIs and file creation routines are finished by early October 2018 in time for the 2019 budget changes, which will be announced in the budget statement next October. We will need most of October and November 2018 to program and test the budget changes. Release date for the 2019 software should be early to mid 2018. One other thing to bear in mind regarding timeframes is that the 2018 P35s will still need to be submitted by mid-February 2019. Effectively, this means that the old and new systems overlap at the start of 2019. I know this will mean greater customer support volumes in that period for us. It could also have a similar impact on your own practices. You might want to consider this when dealing with staff leave requests. Okay, just have a quick look at the file specifications. A lot of what is included in the file specifications you don't really need to know. It will all happen in the background. Our software will allow you to view, in human readable format, the contents of the file before you hit the submit button, if you so wish. It will also allow you to view historic submissions, which you will access through the submission logs. So don't worry, everything will be open and transparent on our end. The full file specifications are included in the links on screen, and we've also included them in the handout section on your control panel if you wish to download them. Now you're going to hear a lot about these particular types of files, or sorry, the file types, the RPN, which is the one that replaces the P2C request. That's the Revenue Payroll Notification, and that's included there in the download link. And you have PSR, which is the Payroll Submission Request, and this is used to submit payroll data to Revenue each pay period. You can read these in full at your leisure, and they should help anyone that has sleep issues. What I want to cover here are the headline items that are either included or left out. So firstly, in respect of the RPN data items, and I say that's the replacement to the P2C request. The first of these is illness benefit. And this was one of the big headline items during the consultation process with Revenue and DSP. I should say DSP are actually now called DEASP, which is the Department of Employment Affairs and Social Protection. It was initially suggested that details of illness benefit would be returned with the tax credit information. This would have been a major improvement on the present position, where the employer often has to guess the illness benefit amount that they need to process through the payroll in order to correctly tax the benefit. It turns out that no details of illness benefit will be included in the revenue payroll notification, and this is due to data protection concerns on the part of DEASP. Instead, the tax credits and cut-off points will be adjusted by revenue for any taxable illness benefit. This means that payroll operators will no longer have to worry about taxing illness benefit. The only downside to this is that many company sick pay schemes require details of the amounts being paid by the department. These details will now only be available from the employees themselves, which may or may not be sufficient proof for the relevant schemes. Accordingly, employers may need to review their staff handbooks and policies for this new regime. Employees will be able to log on to their My Welfare account and get printouts of illness benefit received, so this might also be an option for those sick pay schemes. And interestingly, this change in the treatment of illness benefit will actually apply from the 1st of January 2018, so it's not waiting for the start of PAYE Modernisation. Employment ID, again another headline item that took up a lot of the consultation. This is possibly not relevant to maybe 99% of employees. The 1% are A, those employees who have multiple employments with the same employer, or B, those employees who cease with an employer and are then re-employed by the same employer in the same tax year. The purpose of the employment ID is to distinguish these employments from each other so as to ensure that the employee's tax credits and cut-offs are allocated correctly. One of the problems at the moment is that some of these employees are receiving their full tax credits and cut-offs in each employment, meaning that they are not paying enough tax. The payroll software will handle these IDs in the background, but you will be able to override them if you wish to do so. Now looking at some of the PSR data items, that's the payroll submission request. And when we call this payroll submission request, one thing to note is that most of the API are structured as requests and responses. So the request in this case means the submission made by the payroll. So the first item is the RPN number, and this refers to the previous file spec we were talking about. The details provided by revenue in the RPN will also include an RPN number. So this same RPN number will then be included in the periodic PSR. This will show revenue that the employer is applying the correct or most up-to-date tax credits and cut-offs for the employees. Gross medical insurance paid by the employer. The current P35 specification looks for the amount of medical insurance eligible for tax relief. This information needs to be obtained from the medical insurance provider, as it cannot be worked out by the employer. Fortunately, the PSR specification is just looking for the actual amount paid by the employer, as in the amount which gives rise to a BIK. Expected number of pay periods in a full year. This, in my view, is what may end up paying for whatever PAYE modernisation may cost to implement. At present, if there are 53 pay days in a tax year, the employee gets an additional week's tax credits and cut-offs in the week 53. From 2019, the software and employer will need to know what the start of the year, or sorry, from the start of the year, how many pay days there are. If there are 53, then the year's tax credits and cut-offs may well be spread over the 53 weeks, as against it being spread over 52 weeks with the additional week being given in week 53. And my own back-of-the-envelope calculation is that this could add at least €100 million to the government's coffers each year. Now, this is something we need to do in terms of getting the presentation CPT accredited. So we have a quick poll, and what we want to ask you is, when will the changes to illness benefit come into effect? Is it A, the 1st of January 2018, B, the 1st of January 2019, or C, the 1st of January 2020? And just type in A, B, or C as appropriate in the control panel there on your right-hand side. Okay, I've just been informed the results are in there, and I can say that 90% chose the correct answer, which is A, the 1st of January 2018. So as I mentioned a few minutes ago, the change in the treatment to illness benefit is not waiting for the start of PAYE modernisation. Okay, so this has already happened in the UK, and we're going to give you a quick down in a minute as to how it operates there. In this demonstration, we use our software, BrightPay, which is, I should say at the outset that Thesaurus Software has two software products, two payroll software products. We have Thesaurus Payroll Manager and we have BrightPay. In the UK, we simply have BrightPay. So this demonstration shows you how BrightPay operates. RTI was what they call real-time information in the UK. And I'll also say at this stage as well that both the Thesaurus Payroll Manager and BrightPay in Ireland will have this functionality when PAYE modernisation rolls out. So I'm just going to hand you over to Vicky, who, as I say, will give you a short demonstration of how it works in the UK.
Many thanks, Paul, and good morning, everybody. Just bear with me there just while I bring up the software. Okay, so as Paul has just mentioned, here we have our UK software BrightPay, and you can just see here on screen that I'm just in the current pay period, so week ending Friday the 6th of October. So real-time reporting has been in place in the UK since 2013, and the steps involved in each pay period will just give you an idea of what to expect in 2019 here in Ireland. So every pay period in the UK system, before I process the payroll, my first task is to just check to see if there are any changes in my employee's tax situation. So whether there's been any changes to their tax-free allowance or their tax basis, etc. This is done in the software by clicking the coding notice button that's found on the menu bar here. Just ensuring that my user credentials are entered correctly, and then I click the button to check for notices. Okay, I'll just let that retrieve the information. So if there are any changes to be implemented in the current pay period, I will be notified of these on screen. So you can see I have one employee here where there's been a change in a tax code. To implement the change, I just select the employee or employees in question and just click on Apply Selected at the bottom. So very, very seamless there. Any changes that you do apply, a history of these are kept for you as well. So in the history section here, basically I can come into this screen at any point, and if I just want to check when and what has happened, I can access that listing at any time. So a useful reference tool there. If I close the coding notice screen and just return to my payroll, if I select that employee there, I can now see that that change in the tax situation has been applied in this pay period and going forward. Okay, so we very much envisage that the revenue payroll notification process in the Irish system will very much follow this same process there. So every time an employee is paid in the UK, the employer is required to submit what is known as a full payment submission, or FPS for short, to the HMRC, the UK Revenue Authority. And similarly, this has to be submitted on or before every pay date. The FPS is used to inform the UK Revenue about payments made to every employee and all the associated deductions. And it's also used to report new starters in the payroll and also to report any leavers. So the payroll submission request that Paul has just spoken about will very much be the equivalent of this full payment submission here in the UK system. So to basically produce and submit this full payment submission, my next step then is just to process my payroll as normal. So I just make sure that I've got all the correct pay information in for the week. Okay. Once all my pay items have been entered, obviously just do a final check, make sure that I'm happy with everything, and then I click on Finalize Pay Slips. At this point as well, if I have any employees leaving, I can record their leave date at this stage. I'll just say this gentleman's leaving on the 6th of October. Click on Save. I can see then that he's going to be picked up as a leaver for me. Click on OK, and that's finalized my pay period for me. So BrightPay here will then automatically produce that submission that the UK Revenue require. And you'll now see that the number 1 has appeared next to my real-time information utility here. And that's just to alert me now that my file submission is there ready, so it's currently outstanding, and that I now need to actually go and submit that. So I'm just going to click into the RTI utility here. Here's my submission ready to be sent. I'm just going to click on it, and you'll see here that we then basically produce everything for you in a readable format. So if you do want to just check over anything, you can do so here. You'll see here, this is my employee who I made a leaver, and you can see that his leave date as well is being picked up in this submission there. Okay, so everything that's required by HMRC is in this file. Okay. This submission as well can be printed, or it can be exported at any time before or after the submission. So if you're a payroll bureau, for example, and you'd like to provide your clients with this submission record, then you can do so at any time. When ready to submit this file, it's very, very seamless. I just click on the Send Now button. Okay, and that sends it off to the UK Revenue. Hoping now, it was down yesterday, so I'm hoping today that we're a little bit more success. There we go, and you'll see then it's very, very quick. That has been sent and accepted by HMRC, so I'm fully confident there that everything's been received successfully. And also then the employer also gets an email confirmation as well, just to acknowledge receipt of that submission there. Okay, if for any reason there is an error in the file and missing information, for example, then instead of obviously having the acknowledgements here, what you will get instead is information as to why the submission has failed, and then obviously the user can then go back and correct the amendment needed basically, and continue on with that submission again. To then complete my payroll process, everything is normal then. I just pop back into my payroll utility, and I then distribute my pay slips, so to print them or email them as required, and also then just to arrange payment to my staff, so be it credit transfer, check, etc. there. That same process then is just repeated every single pay period, so very, very seamless. And as mentioned, we very much envisage that the Irish process will follow the same pattern there. Okay, so I'll pass you back to Paul.
Okay, thank you for that, Vicky. I suppose one of the other things I should just say, some thoughts I had there watching Vicky's demonstration, is one of the other processes that's also involved in the UK, and it won't be in Ireland, I suppose, for another couple of years, or I don't know when it'll become in, but auto enrolment. In the UK, that is part and parcel of the payroll process each pay period. Every time the payroll is run, it needs to calculate the deductions and the employer's contributions. It needs to prepare the file for submission to the pension company, and most of those are through an API process as well. So that's one thing we didn't show you on that UK demonstration, but we don't want to overwhelm you at this stage. And hopefully, as I say, if auto enrollment comes in, it won't actually happen alongside the same year as PAYE Modernisation comes in. Hopefully they'll let us have another year maybe. But that's one of the things that you also have in the UK that we didn't show you there. One of the other things we do provide for the bureaus in the UK is a batching process where they might want to, say, process the payroll for their clients, and then at one particular point in time during the week or the month, they might want to send in the RTI submissions, and we allow for that process as well, that they can batch all those submissions and send them in all at the one time. And as you probably saw there as well on the demonstration, that the response time from HMRC is usually within 10 seconds, and say we're hoping for the Irish system to be somewhat similar. It doesn't always happen seamlessly. Sometimes the HMRC systems can be down, but normally they will let us know that they're having issues, and we can actually display messaging within the software in real time saying, look, there's no actual point in trying to send a submission at the moment because HMRC are not going to be responding. Come back at a later stage, and we'll probably have something similar going on with Irish Revenue as well. Okay, just to talk a bit about on or before thereabouts. In the UK, the periodic data submission, or as Vicky called it there, the FPS, must be submitted on or before the actual pay date. In Ireland, it looks like submission will be required within the following week, and certainly before the next payday at the latest. In my view, it will probably be easier to just submit after finalising each payroll in much the same way as we showed you in the UK demo there. At least you will know that the payroll is done and dusted when you close out of it. So anyway, this is perhaps the perfect world scenario that you will strive for in your practice. So let's have a look at corrections. As we all know, there are clients who will not tell you what they have paid their employees in time for these new deadlines. There are clients who will only tell you part of the story and forget to tell you about new employees, or indeed employees who have left until many weeks after the event. There are clients who will drip feed you the information no matter how hard you try. And this was all kind of workable before, as you had time to get everything in order before the P35 deadline. Under the new system, these clients will be problematic. You will need to retrain these clients starting now. It will take at least that long to get them to change their mindset. If a submission is incorrect, a correction submission can be made by the software. If the correction means that more tax is payable for a previous tax month, revenue can apply interest. Also, a correction after the month's close-off or sign-off date, say after the 23rd of the following month, this will be seen as a change to a statutory declaration. If there is a constant pattern of corrections for particular clients, or if there is a pattern of late submissions for particular clients, revenue may take corrective action, such as site visits or audits. They will really be able to identify and target the poor performers under the new system. So again, you really need to work on these clients to get them to change their ways. In the UK, when they rolled out RTI, there was a period of grace of up to 2 years before HMRC started applying penalties for late or incorrect submissions. We have no indication yet as to whether revenue will follow suit or what the penalty regime might be. In relation to the correction submissions, it is interesting to note revenue's thinking on when a correction submission may be required. They very much operate on the principle of follow the money. For example, if an employee is paid the wrong pay in week 1, and it is this wrong pay that is included in the submission, and then subsequently their week 2 pay is adjusted for the over or under payment, no correction submission will be required, as the week 2 submission will automatically include the correction. However, if the actual amount paid to the employee in week 1 is not the same as what is reported in the week 1 submission, a correction submission for week 1 will be required. Needless to say, the payroll software will automatically prepare the relevant correction submissions if any previous pay periods are subsequently adjusted by the payroll operator. Okay, so just some notes I kind of made myself as a former practicing accountant, thinking of what you guys might be interested in as well. Firstly, directors. As is the case at present, any shortfall in directors' pay, say by virtue of a debit director's loan balance, can be processed at the year end in month 12. The tax consequences of this will be no different as to heretofore. Annual payments. There is no change here except insofar as the return should be made for the month in which the annual payment is made. Heretofore, it probably would have been just included on a P35. Data alignment. In the latter half of 2018, payroll software will prepare a return, much like an employee register or say a P35 without the figures, for submitting electronically to revenue. This will enable revenue to have as accurate information as possible for when the new system starts in 2019. Therefore, the RPNs, which are currently known as P2C details, should be as complete as they can be when issued for the first pay run of 2019. One of the main shortcomings in the UK system is the difficulty in reconciling taxes owed where HMRC's figures are different to what the payroll says is outstanding. These differences are usually due to HMRC duplicating employments due to mix-ups with payroll IDs, which is their version of employment IDs. Unfortunately, with the UK system, there is no facility to query or drill down into their figures. we have been advocating the availability of an API where the payroll could query all data submitted in the year to date, so that the payroll could then perform a reconciliation between this data and what it has on file. Such an API would also be particularly useful where employers change their payroll software mid-year or move from a manual system mid-year. The present thinking on Revenue's part is that they will provide a facility whereby our software can query the pay runs included in any P30 and then further query each pay run, drilling down to each line item, in other words, each pay stub item. This should allow for reconciliations in the case of differences. Revenue may also provide a separate API request to help with payroll migration. Revenue estimates that of the total 208,000 Irish employers, up to 60,000 employers still calculate their payroll manually. They will still be able to calculate payroll manually. However, in each pay period, be it weekly or monthly, they will need to log into ROS and enter all the required details for all their employees, a bit like manually completing a P35 each pay period. This facility in ROS will only be available for employers with 5 or less employees. This will obviously be quite time-consuming and prone to error. Therefore, it should become apparent to these employers that they should either be using the services of a payroll bureau or that they should use payroll software. Accordingly, there is the potential for new business for both bureaus and payroll software companies. Needless to say, they will all be small or micro employers, so this needs to be factored into any projections. Because of the need to get things right in a much more timely manner than before, it is important that you set out in your letter of engagement who is responsible for what. If corrections constantly occur because your client keeps giving you the wrong information or keeps providing the information late, the client needs to be in no doubt that any interest that revenue charges or that any additional fees that you need to charge will be their responsibility. Therefore, you need to set out in your letter of engagement what exactly are your services and the deadlines by which time you must be provided with payroll information, your fees for this service, what happens when information is incorrect or not provided in time for the deadlines, and the method of calculating your additional fees when this happens, how the accuracy and timeliness of the payroll is ultimately the responsibility of the client, and that your role is to calculate, process, submit returns using the information provided by the client. Another item I think that you should have in that letter of engagement is GDPR, which is the latest great buzzword. This will be the subject of a separate webinar, which we'll give you details of later on. The majority of clients should find that the new system causes no extra burdens on them. It is the really disorganized client who will be most affected, and it is this very client who will need to change their mindset. So what you need to do next, firstly, you need to check that your payroll will be able to handle the change and that you won't be charged for the new functionality. You need to start educating your clients. You need to review your letters of engagement and review your fees. Okay, I'll just pass you back here to Karen now for a minute.
Thanks, Paul. So while we have your undivided attention, I'm just going to come in here with a little sales pitch. Don't worry, I won't keep you too long. Just to clarify again, in today's webinar we used BrightPay, our UK payroll software, to give you an insight into how PAYE Modernisation works in the UK. As Paul mentioned earlier, both Thesaurus Payroll Manager and BrightPay Ireland will also be able to handle PAYE Modernisation. We have the experience and the expertise, having already done it in the UK. The Bureau version of BrightPay, which handles an unlimited number of employers, all with an unlimited number of employees, is only $299 plus VAT. There will be no additional charges for implementing PAYE Modernisation. BrightPay has many useful Bureau features to help with the administration of your payroll clients. So you can roll back individual employees, you can create custom reports. We will also be adding API integration with Xero, Sage, QuickBooks. Plus we have an optional online backup called BrightPay Connect, which includes an employee self-service and an employer online portal. BrightPay can also import previous data from your payroll software from Sage, Cold Software and the Big Red Book, so you can hit the ground running in 2018, knowing that you are using the right software well in time for the introduction of PAYE Modernisation. And our support team are there to help if you do have any problems switching over to BrightPay. So it'd be a good idea to have a look at a BrightPay demo if you haven't already seen how the software works. So if you just give us a couple of seconds, I'm going to now pass you over to Sinead for the revenue presentation. So thanks, Sinead.
Thanks very much, Karen, and Paul as well for the informative presentation. I suppose today what I hope to do is to give you an overview of how revenue are going about implementing this system, and in terms of the change and the requirements that will be absolutely necessary for yourselves, both as employers and if you're running payroll bureaus, and also how it will affect you as an individual as well. So I suppose just to give you some of the background and design principles, why we are actually modernising PAYE. As Paul said, it's a system that has been with us since 1960, and it has served us very well, and I suppose the basics in terms of the calculations, etc., are not changing. But really what we do need to change is how we actually administer the system and how we actually retrieve data from employers. And the main reasons for this are that employments themselves have changed, and you no longer have people where they are working with just the one job for life. You have people who change employments regularly, who maybe operate under several contracts for one employer, or maybe have 2 or 3 jobs, and all of those nuances need to be catered for in an electronic format. Payroll itself has changed dramatically since the 1960s, back to when we were using ink and quill, and nearly back to abacus days for some people. So that has absolutely changed dramatically, and that has all been aided by the advancements and enhancements of the IT and communications technology that we now have available to ourselves. So people's expectations have also changed, because they now want to be able to administer their business processes in an electronic format, and also for individuals as employees, they want to be able to see and be able to manage their tax credits in an online format. So in terms of the actual system itself, what we hope to do is to have a smart PAYE system, and there will be benefits for both employers, employees, and also for revenue. So for the employers, we would like to have a seamlessly integrated system which will operate with their existing payroll systems. We want to minimise the cost for employers to comply, and in order to assist with these reduction in costs, we are abolishing all of the P forms. And from the various work groups that I have attended with employers, they have advised us that this really is a heavy administrative burden for them on a yearly, monthly basis. So we're getting rid of the P30s, P45s, P46s, P60s, and the end of year P35. What it will mean for the employer is that the right tax will be paid on the current due dates, and we're not changing the date that the tax is due to be paid. And ultimately, when the system beds down, it will result in time savings for the employers. As an employee then, they will be able to access simplified online services through the My Account portal on revenue.ie. It will also allow them to maximise the use of their entitlements. We have carried out some analysis in terms of how people are currently setting out their tax credits, and we can certainly see where there are occasions when people don't fully use their entitlements, or where maybe if they have 2 or 3 employments, those tax credits are not being allocated correctly across those employments. So this will now give the employee the option to be able to manage their own tax credits and allocate them as they see fit. At the end of 2019, we will be carrying out an automatic end-of-year review, and this is where we will actually review the individual's tax credits and tax payments for that year, and notify them if there are any amendments, overpayments or underpayments of tax, and hopefully get it right for the years going forward. It will allow the individual to have real-time accurate data, which again they'll be able to view on the My Account portal, and it will allow them a level of transparency that heretofore they haven't been able to have. Because now when they log on, they will be able to see exactly the amount of PAYE, PRSI, USC, LPT that has been deducted and paid over to revenue on their behalf. For revenue then, we obviously wouldn't be doing this if there weren't going to be benefits for ourselves. So now we're going to have a statutory in-year employer return. We hope to make compliance easier for all, both employers and employees. We will now have accurate, up-to-date income details, and this over time will reduce customer contacts. Obviously, when the system goes live, we know that there will be an increase in customer contacts, and we will be putting supports in place to be able to deal with that at the time. It will also allow revenue to carry out timely, targeted interventions. So we will now have the data in the year where the transaction is actually happening. So if we need to make an intervention, it will be in real time, and the data will also be in real time. Whereas today, if we're going out maybe to do an audit or maybe to, advise somebody in respect of how they're setting up their employment, we're looking at information from usually more than a year and a half ago. So it's much easier to deal with something maybe that's not going correctly in a timely way where we have the information in a real-time manner. In terms of context then, and Paul has already given you some of the statistics, but we currently have for 2016, from the 2016 analysis, 2.7 million active employments. Now those employments include pensioners. We've 206,000 employees that have greater than one live employment, so where they're working with several employers. And then we have multiple employments with the same employer. So you could have somebody maybe under a contract with the HSE who maybe works as a nurse and maybe also carries out some carer duties, or maybe provides some assistance maybe in a nursing home on their days off. And we'd have several people who are operating in several employments, but all with the same employer. We currently have 208,000 employers registered with us. 110,000 of those employers have less than 5 employees, and that's something that we have to be cognizant of in terms of how we're designing the system. 98% of those have actually filed through ROS, so they have engaged with us in an electronic format to date. And in terms of all of the P forms and all of the forms that are required, there are over 5.4 million forms generated to fulfill employer prem reporting obligations, and that includes 2.7 million P60s. So that's certainly an administrative burden that we will be absolutely abolishing. So just to remind people of the current employer obligations. So when they're paying employees, every time an employer pays an employee, they must always apply the latest P2C. They must calculate the tax that is to be deducted for that period. So that is income tax, USE, PRSI and LPT. And also they must provide the employee with a pay slip that shows those pay and deductions. In terms of reporting then to revenue and their actual statutory reporting obligations, they must report on a P45 or a P46 every employee that starts or leaves with them. Every month then they must submit a P30 with the relevant payment, and then by February of the following year they must complete a P35 which will contain the associated listings for each of their employees. So they're the current reporting obligations. In terms then of how we would like to view the system that we're going to design and put in place. As an employer, you will go on to pay your employees. You will seamlessly get the latest revenue payroll notifications, carry out the payroll calculations, finalise your payroll, As you do now, send your bank file for payment, create the pay slips, and simultaneously a report should issue to revenue, which will contain all of the required details. For the employee then, they will still receive their money. They will also get their pay slip, but now they will be able to see on the My Account portal the pay and deductions that have been paid over on their behalf to revenue. Now that's a very simplistic view of how payroll operates, and certainly the payroll software developers laugh when we have it in as 4 boxes, because we do realise it's a far more complex process. But I suppose just to be able to depict it in the actual basic terms, I suppose it's like Ladybird version, that's the way we have designed it. In terms then of actually abolishing the P30s and how that's going to operate. So if, for instance, you are a weekly payer, you will send us in your payroll run at the end of every week, and then at the end of the month, a statement will be issued to the employer that will show the total tax due based on the submissions that have come in for that month. That statement then will be deemed as a return if there are no corrections to be made by the return due date. And then the employer will make their payment in line with the current payment dates. This will obviously allow revenue to carry out debt management for any underpayments in year, and then any of our in-year interventions will be based on risk analysis of that reporting. So in terms of the P45 and the P46s, and again, I'm back to my 4 little boxes. So the employer will list or include the employees that have to be paid on their payroll run. Again, that will send a message to revenue. They will apply the latest revenue payroll notifications. The employer will perform the calculations, and the payroll will run as normal. So the employer has set up the individual by putting them onto the payroll. The similar process will apply where somebody is ceasing in that person's employment, so there will be an option to put in a cessation date on the employer's payroll. But employees can also manage their employment records themselves via the Jobs and Pensions Service, so they can go on and register an employment and then accept Revenue's division of credits and bans, or they will be able to allocate them across, particularly where they have several employments. In terms of stakeholder engagement, we are absolutely aware that employers currently focus on an end-of-year reporting process, and that this really will no longer be acceptable in terms of the new system. The real-time reporting regime will make all of the payments and all of the information visible, and such processes now need to change. So it's no longer acceptable to just submit a P30 with an amount on it and then at the end of year fix that up on the P35. That's no longer going to be an available option. Corrections, we know, are a part of the payroll process, and really, I suppose, why we would like to ensure that, you know, corrections and errors are minimised in terms of the data that's being returned to revenue. We do understand that there are times when corrections are necessary, and we are building a facility into the payrolls and into what revenue will require to be submitted to be able to cater for that. The employees themselves should be able to easily reconcile their pay slips with what has been submitted to revenue on their behalf. So again, corrections really should be kept to a minimum. And all data that's received, including corrections and the timing of submissions, will absolutely feed into revenue's risk analysis systems. Paul mentioned the illness benefit, and just in general in terms of the Department of Employment Affairs and Social Protection payments, we will be now receiving real-time interfaces of all taxable DEASP income, and this income will reduce the tax credits and rate bands for an individual, and an updated RPN, revenue payroll notification, will be made available. Where DEASP payments have been mandated to employers, it will be necessary for the employer to remove that payment from the pay for income tax, PRSI, USC, and then calculate the deductions based on the revised RPN. Where the DEASP payment has not been mandated to the employer, then they must use the RPN to calculate the deductions. It's important that the payroll polls every time that the payroll is being run for any updated RPNs since the last payroll run to ensure that the payroll is correct and that the correct deductions are being made from all employees. As Paul mentioned, the illness benefit is going to change and it will start to be taxed via the existing P2C from 2018, and as a result there will be more frequent P2Cs for employees in respect of illness benefit. And then from the 1st of the 1st 2018, the illness benefit letters will no longer be delivered to the RAS inbox. Readiness is extremely important in terms of how we are preparing to carry out this change. And we are now contacting employers who appear to have not informed revenue of new employees. And this is based on the analysis of the 2016 P35 returns. So this is where revenue has only been informed that an employee is working with an employer when the P35 has come in. So those letters are now issuing, and they'll be issuing on a phased basis. They've commenced in September and they will continue to issue out into October. And these letters will be available to view in your RAS inbox under the category of PAYE Employee P35L Review. And this is something that we really do want employers to act on. And if you receive one of these letters, you need to follow the instructions that are in that letter, because really we need to have the data correct and we need to have our data aligned for 2019. We're also tidying up cases that we know have a W number, but they have also been issued with a PPSN from DEASP, and also SP cases where there has been an X and a T, or where there have been multiple employments on our system. So we are currently doing a data alignment, but we also want the employers to try to correct existing data and to align their data with what revenue holds for their employees. We are going to ask employers to create a list of their employees, and we're working with the payroll software developers to be able to format this in an electronic capacity. And we will probably look for this information in June of 2018, and we may look for it to come in when you're filing your P30s in June. And really what we want is a full and complete list of everybody that is currently working for you at that point in time. And the objective of that exercise is to ensure that the RPNs for 2019 will be correct from the start of the year, so that we know we have absolutely everybody that's working for you on record. And then we will follow up this submission with a matching exercise which revenue will carry out. So change management and communications. We know that it is going to absolutely be a challenge for revenue to engage with those employers who are not covered by any of the main representative bodies or other umbrella of organisations. And we're certainly out there trying to spread the message that this change is coming to all employers and to make sure that they are all aware of their changing obligations. We have been actively engaged in this process since early January this year, and we will be continuing to get out there and meet with employers and representative bodies, and just the smaller employers as well, and those maybe who may be more vulnerable in terms of the age profile, that all of these people will absolutely receive the message that this change is coming. The timeline for the implementation is the 1st of the 1st 2019, and we recognise that this project is not just a software challenge, and that there are absolutely significant business process changes required both on the revenue side and also from the employer side, as well as the payroll software developers. And it's certainly a change management exercise that absolutely needs to be completed well in advance of the 2019 go live date. Readiness on both sides will be challenging in terms of timescales, and certainly ourselves, we will be monitoring this closely throughout the project. We hold an external stakeholder steering meeting on a monthly basis, and certainly we will be assessing the readiness of the people who are attending those meetings and also the representatives that they are there to represent, and that will help us to assess employer readiness for the go live date. Just to give you a flavour of some of the stakeholder engagement, and this is just a snapshot in time for some of the meetings that we have been holding during September and will be holding for October, November and December. And certainly we've been attending a lot of the larger tax agents and practitioners client events where we've been speaking and informing them of the changes that are coming down the line. We've been carrying out some webinars with Thesaurus, similar to the one we're doing here today. We also have some IPAS briefings, which will consist of a roadshow from Letterkenny all the way down to Cork, where we will be speaking to IPAS members in respect of the changes that are going to be required. But for yourselves, in terms of preparing for PAYE Modernisation, I suppose this is really just a little checklist that we would like you to run through, and to run through it every time you're carrying out your payroll. Making sure that you have the correct PPSN for all of your employees. It's astounding some of the feedback that has come back to us from employers whereby people don't have a PPSN, or they're using a PPSN belonging to somebody else, but because the system accepts it, it's actually put through on the payroll. So we need you to make sure that you're using the correct PPSN, making sure that those employees have been correctly registered with revenue, making sure that you are operating the up-to-date tax credit certificate for all of your employees, and that's very simply accessed through ROS. Making sure that if somebody ceases in employment with you, that you follow out the complete P45 process. And in terms of the 2019 changes, that you look at your controls and how you currently monitor the likes of BIK and notional pay, and that it's not left to an end of year review process, that you would now look at reviewing this on a quarterly basis. And just to make sure that you're currently aware of your duties as an employer at the end of the year. So in terms of next steps, well, as I said, we will absolutely be out there and putting as much information as possible on revenue.ie, and we have a dedicated section there for employers, and also from a technical point of view there are updates there on revenue.ie. We will continue to hold the monthly stakeholder update meetings, and then we have a monitored email address where any questions or feedback that you may have can certainly be emailed into us, and we will try and answer those on a daily basis. So thank you very much.
Thanks, Sinead. Okay, so if you just give us a few minutes here, we're just going to get ready for our panel discussion, and we're also going to turn on our webcam so you can get a look at everybody today. So just bear with us now just for a minute.
Okay, welcome back. So we're going to basically have say, a panel discussion and Q&A, and I think it's basically the two things will be going on simultaneously. I suppose just to kick it off, one of the things I'll just ask first of all, Sandra, practicing member and a council member of the Institute of Taxation, what have the Institute been doing, and what are your own feelings about this PAYE modernisation crack?
Okay, well, as you both stated in both of your presentations, this is a massive change to the PAYE system, to the PAYE regulations, and certainly very different to what we've been used to in recent years. It's going to be a challenge for practitioners and also the education of clients, employers and employees alike as well, in that effectively everything is moving online and to a real-time system. In terms of the Irish Tax Institute, we have been very active through our Tax Administration Committee, our policies and representations. We've attended and held, in conjunction with Revenue, a number of workshops at various conferences and specific breakout groups as well. This is something that we'll be continuing to do through the remainder of the process between now and the implementation in 2019. We're welcoming and receiving feedback from members, which we're obviously passing on then to Revenue around the various concerns. I suppose one of the major, or the most frequent items that have arisen along that feedback has been in connection with the smaller employers who maybe only do payroll once a year, and I suppose we might see a lot of this maybe has come through the likes of the farming community, and also the rollout of broadband and the ability to have access to an online system for producing the payroll has also been one of the concerns that's been brought to the attention of the Institute. So yes, it's a very, very challenging time for practitioners, especially the start of 2019 is going to be a very difficult period. We're going to have the lap over between the old system and the new system. We're going to be dealing with trying to file P35s for all the clients that we process payroll for before mid-February. In addition with that, we're supposed to be also dealing with real-time the PAYE modernisation, the new rules, and also dealing with the usual run-of-the-mill day-to-day stuff of quarterly, bi-monthly, annual VAT returns that will need to be filed for the 23rd of January. So it's going to be a very hectic 2-month period for practitioners.
I'm certainly glad I'm not in practice anymore. Yeah.
Come and join us if you want.
Yeah.
Take you in on this comment.
We'll have enough on our plate, in that, especially that first 2 months of 2019, or yeah, say with the P35 deadline still looming and the real-time rolling out during that time as well.
Yeah.
Okay, any questions there, Vicky?
We do. We have a few questions in. So one of the first questions in is, will the new system be mandatory for all businesses, or will micro businesses be exempt?
No, it's mandatory for all businesses.
Okay, thanks, Sinead. In regard to the P60s, what if you have employees that English isn't their first language, and they, or possibly employees don't have access to computers?
Okay, where somebody has already engaged with us in an online format, then we will continue that engagement. So they will be required to engage with us in an online manner. We are looking at different language versions, in terms of how we can update the system to make different versions of languages available. And again, that's something that is under review at the moment and is in design stage. But in general, I suppose we have several staff in our public offices as well with language skills, so we would be directing them there as well if needs be.
And Sinead, I was going to say, if there was a question there, but if somebody doesn't have a computer, would it be an employer's responsibility maybe to have a computer for employees to access their online portal, do you think, if they don't have it at home? Or
Yeah, that I suppose is sort of outside our remit in terms of the responsibility for the employer, but I mean, the employer will be able to print down a statement for them if required, but ideally the best option is that they be able to go online and access the details themselves.
one of the feedback we saw during the consultations is that although the P60 is no longer required, I think some software developers are probably planning on continuing to have some sort of P60 capability within the software. And I don't know what this will be an official form or not, but I suppose even the final pay slip actually has the cumulative details to date for the year, which is equivalent really to what the information is contained in the P60. But I'd say that's just something that has been included in the discussions.
Another alternative there as well would be probably the revenue app then, that the employees could access it through their phones and download the CERT, the end of year statement of their earnings from the revenue app.
Yeah, they probably need that as it comes to the bank or anything for a loan.
Yeah.
It's equivalent to like the P21, really, isn't it? Yeah.
So when they have access to a computer, most of them, I'm sure, would have.
Yeah, most people are checking their online banking, even online pension statement, you know. So it's just, I suppose, a new mindset, you know, a new habit for people to get into.
And we will be engaging with all of the institutions that generally require P60s to ensure that they're aware of the change and that they will now be able to accept what we will call possibly a statement, an end of year statement or a statement of account, and that it's not going to look like a P60.
Mm-hmm. Okay. Could you also tell them that notices of assessment no longer exist?
We do our best.
Just remind them gently.
Just a common question coming in actually is just with regard to revenue and maybe a possible timeline for informing employers. There's just a couple of comments in there that some clients aren't aware of PAYE modernisation at the moment. Is it the kind of a timeline for correspondence? Or?
Yeah, well, I mean, at the moment we have been actively engaging with all of the representative bodies and a lot of the larger employers, and certainly we've been putting all of the information and publishing all of the information on revenue.ie. But as the project ramps up and as it gets closer to the go live date, there will be a much more interactive engagement process in terms of actually getting out there and, you know, getting the reach out to all employers. But particularly the external stakeholder meeting, there are representatives on that from the majority of the large employers, from certainly all of the representative bodies that would have replied to the public consultation process, and we would ask that they would be spreading the message that comes from that monthly meeting out to their members. And certainly I'm aware that the ITI, the CAI, the Insurance Association of Ireland would certainly be very proactive in that way, as well as the Small Firms Association and ISME. So a lot of the information that we are producing and publishing should be issuing through those formats as well.
And that's one of the things we try to do our bit there as well, in that we'd have it on our newsletters, and sometimes we have it on our open company screens, you know, advertising things like this webinar. We have like an employer webinar coming up now at the end of October. So let's say, I think software developers themselves will probably be send the message out to their customers as well.
We've also included it on the most recent employer notices that would have issued into all employers' ROS inboxes. So a lot of the time we know that these notices are not opened and not read. So, you know, we are absolutely trying to target directly the employers, but if they're not opening their ROS inbox information, then they are going to miss it. But it certainly is being included on everything that we're sending out.
Okay, thanks for that, Sinead. Again, the common question coming in is just regarding, I suppose, the payment of the P30. So one of the questions being asked is if you're currently in a direct debit system for paying your P30, is that going to continue or will that be stopped?
No, we're currently reviewing all of the payment methods, and there will be an option for direct debit. We're also looking at maybe having what we would call a variable direct debit, whereby it might actually match with what the actual monthly statement is, so that there isn't a big bill required at the end of the year to top it up. So that's all currently still in planning.
And quarterly, anybody who's on a quarterly payment scheme?
All of those schemes are currently under review, but we're planning that they will still be in existence.
Okay, thank you. Sorry, just bear with me there. Will there be a pilot run in November or December 2018 where you file a weekly return and also do a P30 return?
No, we're not running a pilot for the system, but what we will be doing is our user testing, which will be going live from March. So we'll be engaging with the payroll software developers at that point, and they themselves will obviously be engaging with their clients and employers to submit data, and we'll be testing that, but it won't be a pilot phase per se.
I know in the UK they actually had a pilot year, but I suppose the take-up of that actual pilot was by a minority of employers, and because it is a lot of hard work, sort of to some extent parallel running, and your old system with the new system and effectively debugging the system as it go along. So it will be very difficult, I think, to have some sort of pilot run in November, December from a technical point of view as well as an infrastructural point of view.
Okay, probably just a follow-up question, I suppose, kind of related, but when, say, an office is closed, say, for 2 weeks at Christmas, will it be possible to run and file 3 weeks of wages in advance?
Yeah, that's certainly an option that we're currently looking at as well, because we know that offices are closed and the payroll still has to be run. So yes, we are looking at the options to have it come into us in advance.
Great, thanks, Sinead. We'll give Sinead this break then. Is BrightPay replacing or taking over from the Thesaurus payroll manager?
No, no. Well, still, both products will still continue to be available in the Irish market. As I say, in the UK market, we only have BrightPay, but in Ireland, we'll continue to have both products. I guess, you know, a lot of people are very used to using Thesaurus Payroll Manager, and it would find maybe quite a big change. Having said that, you know, if they did want to move from Thesaurus Payroll Manager to BrightPay, it's quite easy to do so because, you know, it's basically a very automated import. And there are some features that BrightPay has that are probably superior to Thesaurus Payroll Manager. I mean, one of the things I can think of is to be able to, you know, correct a single employee going back, whereas with Thesaurus you have to do the, you know, full reverse. So that's quite a useful feature in BrightPay, and plus, you know, there's customized reports and things like that you can prepare, which Thesaurus doesn't have that capability at the moment. But no, in terms of PAYE Modernisation, both products will cater for that. Okay.
Just bear with me there. Just regarding the P60, sorry, I've lost. Will the new income statement be sufficient for mortgage lenders as a replacement?
Yeah, as I said, we will be engaging with all of the relevant institutions that look for a P60. So you would have the SUSI grants, you would have the mortgage lenders, sometimes the HSE might look for it in terms of medical card applications. So anybody that's currently using our P60 as a statutory piece of information, we will be engaging with them to ensure that they understand that this new statement of account is the replacement for that.
Okay, and will an employee still be able to request an annual P21?
Yeah, well, what will happen is we'll be carrying out an annual review for everybody at the end of 2019 into 2020, and then we are going to look at whether that's something that we will continue doing or where the individual needs to do it. So again, that's something that's in our design and planning phase at the moment.
Okay. I don't know if the panel just want to cover as well, again, it's just a common question coming in, for those that maybe are on a quarterly return at the moment, is the requirement to submit, if it's a weekly payroll, that it's a weekly file submission?
I think basically every time the payroll is run, the submission needs to be made. That's the PS or the payroll submission request. Yeah, that needs to be submitted every time you process the payroll. So in a quarter, you'll be doing that 13 times, and that'll feed into, say, revenue system, which will identify the liability that's due either at the end of the month or at the end of the quarter.
Yeah, it's the reporting, I suppose, of the information that's changing, but the payment deadlines will still remain the same and the payment processes.
Absolutely.
Okay, and that probably just answers the following question. Occasionally paid employees, should employers report as soon as the employee is paid, or these payments can they be returned at the end of the year?
As the person is paid.
Yeah,
Absolutely, as the person is paid.
It's real time. I mean, that's the concept.
In relation to casual employees or those taken on for an occasional project, is it necessary to enter leave dates for them? So this would mean having to enter their details each time they are taken on, which can be quite tedious depending on the numbers involved.
Well, I'm guessing from a point of view of them, they may work with somebody else after they finish maybe the contract with the employer. So from a point of view of getting their allowances transferred over to the new employment, it would be best to enter a cessation date for them.
Yeah, and it's certainly something that we would be encouraging, because then it keeps the records right, both from the tax point of view and also from their PRSI point of view.
I suppose it should be said that if they're not actually ceased within a particular employment and they do take up another employment, the employee still has the capability of logging into their My Account and basically transferring their allowances across to that other employment anyway. So it's probably not the end of the world if they're not ceased from a casual employment, if they're going to be sort of used again in a couple of weeks' time or whatever. But I suppose the payroll will allow you to put in a cessation date. It won't be quite as big a deal as it has been before in terms of the administration, because you won't have to prepare a P45, you want to submit a P45 separately into Ross and then print it out on the revenue paper. It'll just be included in that payroll submission request for that particular period. So it would be very seamless, and there probably won't be any. I think that one part of the question there was that it would be quite difficult, or
I think it's more actually to do with when they say, for example, if you have somebody and they work with you in week 3 and then they don't work with you, and say they're there for 2 weeks, and then you notify on the PSR that they're finishing at the end of week 4, that they're a leaver, and they come back on at week 7. You have to start inputting their details again. So that's something that maybe the software would handle, where you can pull in and say,
okay, fair enough.
Paul Byrne is
to copy
back again to copy the records or the information. Would that be a possibility or not?
Yes, it's a current request that we have, yes.
So you said it now,
yes,
we're putting it on the spot.
Okay, so another question. Revenue continue to issue directives with a PAYE credit in error. We are currently able to manually override this within the software. How will Revenue deal with this in 2019 so that the earned income credit is applied instead?
Yeah, that's something that our own planning division would be looking at. So that's something I can certainly bring back, that it's come up here today. It's not something that I'm currently involved in at the moment, but I'll certainly take it away and get the details on it.
I suppose really the only other thing that you could look at there is that it would be the directors logging into their My Account to change the credits within that potentially. But again, I know myself as a practitioner, the clients rely on us to do everything for them. So especially if the directors and they're paying you to do the payroll, they expect you to take care of all that as well, which obviously is an additional requirement we don't really want to have to engage in.
Okay, why is it that if a P45 is filed for a new employee with Revenue, the P2C file can come back with nil credits and cut-offs, and Revenue don't communicate this with the employer? It doesn't make going forward with the new system very easy for employers when employees are not aware of obligations to register and change credits.
I suppose really the nil cert needs to be adhered to. So if we're saying that the person should be on nil credits, they may have another employment, their credits may be allocated to a different employment, but I think the option now for the individual to go on and look after their employment registration and actually allocate credits should alleviate that problem. But if we issue a cert with nil credits on it, we've done that for a reason. And again, we're back to sort of data protection and not actually, giving out information to an employer that may not be relevant.
I think the question there was actually that they've uploaded a P45 to an informed revenue that the employee has left the employment, but they're still appearing on the P2C file, and that's quite a common call that we get, especially at the beginning of a tax year. They could tell you there's 5 employees there, they've uploaded P45s, but for some reason they remain on the P2C file.
Okay, well, I mean, again, that's something that we're looking at in terms of the data alignment, and hopefully the employee list will certainly iron out a lot of that, and where people are absolutely using the correct PPSN, again, that will form part of our matching and correction process. So we have been asking employers where they are in receipt of P2C information for somebody that is no longer working for them, that they notify us.
Sinead, in relation to the data alignment, is that something they'll be able to upload more than once? So, for example, if they upload it next July and then, you know, maybe they've 10 new employees, they feel it's a good, you know, could they upload this?
That's something that we're going to look at as even something that happens on an ad hoc basis for accuracy and making sure that it is matched correctly. But I suppose we want to try it, see how it works. Certainly it will involve a lot of processing from our end to ensure that, you know, both sets of information are matched. Yeah, so we'll look at it after that.
Okay, and just a couple of Thesaurus related questions then. Will Thesaurus have the option to put in a future cessation date?
Well, Thesaurus at the moment does. It's just that Ross won't currently accept a future cessation date, but Ross will with the new change under PAYE Modernisation, so it will be something that can be reported in advance.
And will Thesaurus also be compatible with Sage for integrating accounts information?
We actually have that export at the moment, do we?
We do.
Yeah, we have that export. It's a CSV export at present, but when we have the APIs built into BrightPay, we'll also do the same work in the Thesaurus Payroll Manager.
Okay, it appears that BrightPay dovetails very nice with the UK revenue system. If someone was to use BrightPay Ireland for the Irish revenue system, does this mean that the user will not need to log on to revenue for each payroll submission? They will only have to log into BrightPay.
Well, that's, yeah, it has to really work that way, because I kind of covered as part of my presentation that it'll be linked to the digital certificate that's installed on that computer. So it would be it's a process you only have to go through once in terms of maybe authorizing that payroll software to make submissions. So that's something you will do at the very beginning, say, of the year. But from then on, it will hold that information. That's my understanding of how it will work.
It'll be the same for Thesaurus. It won't just be for BrightPay. It'll be the same for both, that everything can be done within the payroll system.
Yeah.
Just a couple of agent-related questions then. So for 2018, when an updated P2C file is issued, could the revenue email the agent and state the employer in question? Any plans?
Again, you're back to data protection and confidentiality issues there, but we are certainly working with both our design team and representatives in terms of the agents and part of the ITI in terms of looking at agent requirements and trying to build in better facilities for agents so that because we do know that they are required sometimes to, you know, manage what really an employer would be managing on behalf of their clients. So we are looking at giving them additional access, but at the moment that's still something that's under review.
I suppose, sorry, just under PAYE Modernisation, the system will check every pay period anyway, so the agent wouldn't necessarily need to be worried about logging into Ross and checking. So that should be, you know, that'll save some time.
Chances are the system won't change though for 2018.
No, it's probably something in 2019.
There was an improvement there, wasn't there, that an agent can log in and see all the P2Cs on one screen or something? Wasn't there a change recently?
You can as an agency, the P2Cs, but I suppose really the question that's being asked there is about, you know, knowing who the P2C's updates are actually in relation to, whereas we actually have to physically go in and check every single payroll as we're doing.
I thought something had changed recently. Okay.
And will an agent be able to amend a director's tax credits via Ross, or can it only be amended through my account?
It can only be amended through my account. There's no facility on Ross to amend it.
Yeah. Okay, thanks, Sandra. So just bear with me.
Just while Vicky's looking at the questions there, I suppose emergency tax is something that's come up as well before, in that there'd be very seldom will an employer need to use emergency tax for an employee. At
in the new system,
yeah.
So it's really where there's no PPS, the employee doesn't have a PPS number.
Absolutely.
Which is full emergency, basically. It's nil, basically, in terms of tax credits and cut-offs.
And I suppose if a submission is coming in for any sort of extended period of time without a PPSN, revenue will be intervening at that stage. So where it has been accepted now and it has come in on the P35s without PPSNs, we're currently looking at only allowing a specific period of time whereby a PPSN then must be supplied.
Another improvement I think we've agreed at the meetings, but we haven't spoken about today, is the exclusion order. So that's going to be part of the RPN going forward under PAYE Modernisation, which will help. I think again it's another thing that will be automated as opposed to a paper form.
And again, that's something that's in design stage at the moment.
Okay, just a couple of directors' questions. I want to distribute previous year's additional profit to a director after accounts finalised. For example, like a bonus in respect of previous year's performance. How will that work?
It will be based on when the payment is actually made to the director. So, for example, if it's the 2018, December 18 accounts, and you're making the payment to the director at some stage, probably up to the 6 months, June 2019, then it will be June 2019 that you're declaring the payment through the PSO.
Yeah.
And at that point, that's when the PAYE PSI will be paid.
Okay, and VIK on directors' loans, would that be okay at year end?
Well, I suppose the way it's meant to happen at the moment is you're meant to actually include it on each pay run.
It should be spread.
Yeah.
So it should be in each.
Technically, it should be spread from the start of the year.
Okay, and regarding directors' salaries, we currently put in a gross annual figure when doing the P35 return, i.e. using the list employee section on Thesaurus payroll. My question is, will it be possible to adjust the director's salary in the last month of the year, i.e. December 2019? I understand that the directors must be set up and be on the payroll from week 1 or month 1.
Yeah, I mean, I don't see why that won't be possible.
I suppose it comes down to when is the money paid. You know, I mean, it would only be right to adjust it in the last month if that's when they're physically receiving the rest of that money.
I suppose, yeah, that there are interest implications. You know, if the payments were being made throughout the year, but then it's just the missed employee facility is used in the last month. You know, that I suppose if you did have an audit down the road, I mean, that could raise the interest on that, and that does make payments effectively.
How do we attach a new employee to an employer's tax number? Is it only through my account now, as a lot of our clients and their employees are not computer literates, so this will be a challenge for them. Is there a way for us to add the employees by way of P45 or P46 as before?
Payroll workers. This is under PAYE Modernisation, I assume. So, I mean, once they're set up on the payroll system, the payroll will send a request to Revenue for an RPN, and that'll be a request for a new employee, which will create the new employee on Revenue system, attaching it to that employer's PAYE registration number.
Yeah,
so again, very seamless.
Yeah, the RPN is again, it's probably something you don't need to know, because it'll all happen sort of seamlessly onto the HUD as such. But there are two different types of RPN. There's what they call a lookup RPN, and there's a new RPN. So the lookup would be actually querying for changed P2C details for existing employees, and then the new RPN request would be for new employees that have joined. So there would be actually two separate calls from within the software. So if you've added new employees into your payroll, the RPN or the new RPN request would then be generated separately. So hopefully that would match things. I don't know if that answers the question or not.
It will certainly, under PAYE Modernisation, it will be much more simpler and seamless process than it is at the moment, but for 2018 and for the rest of 2017, you know, it is a case that the new employee is supposed to go on through My Account or to contact Revenue directly to register the employment. And I don't think that the P45, like, I know you can still possibly upload a P46 at the moment, but I don't know if it's being processed.
Yeah, no, they will be, but only up until the end.
Really, the My Account is for the employee's first employment. So that's replacing the Form 12A, but the P45 Part 3 and P46 still exist at the moment. Yeah.
I suppose, in a way, there's a lot of, you can imagine there's a lot of training maybe required for some employees. Maybe, I don't know whether employers will take that on or not in terms of, you know, sitting them down and showing them how to use My Account.
Yeah, it's something that we certainly will look at, but not at this point in time, because we definitely feel it's too early for employees, because it's not going to affect them until 2019, but certainly later in 2018 we will absolutely be engaging with employees and making sure that they're aware of how the changes are going to impact on them.
Just some general questions, Sinead, just about the meetings. Can accountants go to either the IPAS meetings with Revenue or the stakeholder meetings?
Yeah, we've opened up those meetings, but there are representatives from, say, the CAI and the ITI at those meetings. So obviously we can't facilitate 200 people turning up for a meeting. We only have a small meeting room, but we do have a WebEx facility. So certainly if somebody wants to dial in, if they contact me on the PAYE Modernisation at revenue.ie email, I can certainly facilitate that. But there are representatives there from CAI and the ITI at each of those meetings.
Okay, thank you.
Also, Vicky, just in relation to that, in relation to the Irish Tax Institute, we also have a dedicated page on PAYE Modernisation on the website as well. So there's information there, and it's being constantly, you know, updated following workshops or, you know, further information coming down the line from Revenue. So it's worth probably keeping an eye on those as well. And as Sinead said, on the Revenue website also, there's a full update being maintained there of any further updates that are happening.
Okay, thanks, Sandra. Paul, you mentioned a sample, a letter of engagement in your presentation. Do you have a sample letter of engagement?
I'll talk to Sandra later on about
Sandra, do you have a sample letter of engagement?
€1,000 plus VAT, no problem.
And just in query about our Thesaurus newsletters, how can you sign up for them?
On the website, there's an option to sign up for the newsletter.
Yeah.
Yeah. That's there.
Or better still, become a Thesaurus customer and you get them automatically.
Okay, so I just found there's an awful lot of questions in today. LPT time and notifications to employers. How can you deal with getting notifications mid-year?
How do you deal with them, is it?
Or how will they be dealt with? Well, that should be.
Whether they come in on the RPN and it'll be the same,
yeah,
it's just spread evenly over the remaining pay periods in the tax year, so nothing will change there.
Okay. We have a lot of staff that come and go, sometimes after 1 week. I can't currently register them without a P45, so I put them on emergency tax until they register themselves. How will I register staff that don't supply a P45 in future?
Well, under PAYE Modernisation, you won't need a P45. You'll just be providing the PPSN number and the start date, and the revenue system will come back and determine the credits and cut-off point to be used.
Okay, thank you. Can an employer make weekly P30 payments, say €500 per week, but when the P30 is produced and it's more than the payment, will they be hit with charges because the payments made have been incorrect?
The weekly P30 payments, there's no facility, and I don't think there's any planned facility for such payments to be made weekly.
I think you can go in and make payments intermittently on an account at the moment.
Just log into
a
Ross.
Revenue account, yeah, through your Ross, you can actually make payments there at the moment.
Quite clunky though, isn't it?
Probably is a little bit clunky, yeah. But there is a facility there to do that, which is not like, it's not based on a P30 return. It's just making a payment on account. But obviously, it's up to each employer and taxpayer to ensure that the payments that they're making are going to cover whatever their liability is. If you're making €500 per week and you get to the end of week 4, and if your liability is 2,400, then it's up to you to ensure then that the 400 is paid by the 23rd of the month following, and then you're in line.
Thank you. Sorry, just bear with me there. Kind of just conscious of time, just maybe just covering some of the common queries coming in.
I suppose if we're not going to get through all the questions today. If there's any there that we don't cover, we'll try and get back to whoever has asked those questions. And maybe, I don't know whether we do a general sort of response to everybody, or we'll just communicate directly back to whoever's asked the question.
Yeah, so we had the webinar yesterday, and those unanswered questions have already been answered by email directly to the individuals. So, you know, we'll get to them before close of business tomorrow. So.
Okay.
Perfect. Great.
Okay, so yeah, we're kind of out of time, and I'm conscious that Sinead and Sandra probably have to move off somewhere. And thank you very much, Sinead. Thank you, Sandra, and Vicky for working through those questions, and Audrey for keeping me on the straight and narrow with the knowledge, and Karen. And hopefully we'll see you again. Our next webinar is actually on GDPR, and it's on the 26th of October. So if you go on to the Thesaurus website and the events page, you can sign up for that. Okay, and thank you all for joining us.
Thank you. Bye-bye.
Thank you.